Welcome back. To hike or not to hike is not the question. It's a question of basis points. Will it be 25, 50, and what to come of that Fed balance sheet? We're going to talk about it with Victoria Fernandez, Grossmark Global Investments Chief Market Strategist. Victoria, always great to see you. And we were chatting over the break here. Powell's kind of in a bind here, but my big question is he going to be the adult in the room like Paul Volcker, who was brought in to tackle inflation in the early 1980s, or is he going to lean a little bit dovish, as central bankers are wont to do at various times?
Yeah, so Jared, I think you're right. I think he's going to lean a little bit more dovish for the sheer fact that I think that's what he's wanted to do all along. He was being pushed to really get in there and raise rates. Everyone's saying that how far the Fed was behind the curve. So he knows he needs to do something, but I don't think he's in a rush to do anything quickly. You know, he had his whole line about inflation being transitory, and part of it is, that's true, but a lot of it is longer lasting. And so at first, that was his reason for not hiking quicker. I think he can use the Russia-Ukraine issues now as another reason to maybe go a little bit slower than what people are thinking. So I think the market might be a little more hawkish than what Powell and company are. He laid out the 25 basis points at the hearings a week and a half ago, and I think he's going to stick with that and then talk more about balance sheet reduction.
Victoria, doesn't he have to drop the hammer? We had the producer price index out this morning. It hit 10%. It is up 10% over the past 12 months. Gas prices are high. At what point does the Fed sure acknowledge what's happening in Russia, Ukraine, but come out here and send the market a strong signal that you might need a 50 basis point hike?
Yeah, Brian, I don't think they're going to do it at this meeting. I mean, maybe we look for the May meeting or the June meeting. If we don't see inflationary pressures pull back a little bit, then maybe that's when they go in and then drop the hammer and do that 50 basis point hike. But I certainly don't think it's going to be at the March meeting. And I don't think they're going to insinuate that it for sure will be at the May or the June meeting. I think they're going to leave their options open. You know, they like to use that term nimble, where they can say if inflation continues at these high levels, they can do 50 basis points. They're going to start talking about balance sheet reduction, and that's a form of tightening. So I think they're going to use the temporary inflation that we're seeing in some of the commodities as cover to stay the course right now.
All right, Victoria, enough Fed talk. We got a lot going on in the markets. Chinese stocks are tanking. We have meme stocks on fire. The general markets seem to be on the precipice of a potential collapse. We were looking at the B of A Global Fund Manager Survey just prior to this, and they're not quite at capitulation levels. I'm just wondering what you're making of the current market environment.
Yeah, so Jared, you were talking about the bull-bear ratio. We can see it with the put-call ratio as well, where they're not quite at those levels where they turn to say, yes, it's going to be something positive going forward. They're not quite negative enough at this point in time. But we think we're going to continue to see this same kind of volatility because there are so many uncertainties out there. And I think that's just going to continue, if not increase, over the next quarter or so. So we're trying to be opportunistic. I don't think you need to sit with a large amount of cash in your portfolio. I think you can put money to work here, but you have to be choosy. So we like financials because they have taken quite a hit here recently. We think there's some opportunities there. Bank of America, Visa, MasterCard are three of the names that we've been purchasing lately within that sector, but we still like the consumer. I mean, look, I know that some of the economic numbers right now, Brian mentioned the PPI, are on these high levels, but you still have a strong labor market. You have wages that are continuing to be strong. We had PMIs that showed prior to the Ukraine-Russia issue at the beginning of the year were actually rebounding. So I think you have a pretty good foundation to go in and pick up some names that have fallen back a little bit and trim some of the names that are doing well.
Victoria, sources over the past 24 hours have told us Apple could really see a financial hit because of this Foxconn plant closure. It's unclear when that opens up. Are you still a buyer here, or are you trimming your Apple position on this news?
Yeah, we actually bought Apple over the last couple of weeks. I mean, the name has come down tremendously. You're down, 17% year to date, I think, so far. So I think you can go in and buy that name. Look, they've got such a strong balance sheet. They have a tremendous cash position. So will they take a little bit of a hit? Perhaps with the supply chain issues, they will if it goes on for an extended period of time. But we think they're sitting in such a good position financially as a company that they're going to be able to ride through that. And for a longer term investor, investor, which most of our clients are, that gives you an opportunity to go in and either start the position or add to your current position with prices that have come down.
All right, we got to leave it there, but always appreciate you stopping by. Victoria Fernandez, Grossmark Global Investments Chief Market Strategist.